Hey everyone, welcome to another edition of the Buddy Study Group for Worksite Solutions. And thought it was time for kind of a state of the union on one of the very specific drill down pieces of the group sales process, and that's employer funding. So, as I said in the agenda, I think the one piece of news I can absolutely give you about employer funding in good confidence is that it's not going anywhere. It's still going to remain a huge part of group long-term care, not just for us, but part of the reason we're having this study group is that the rest of the industry is really starting to take notice and act when it comes to employer funding. So that includes, just more brokers in general and employers going toward employer funding strategies. But also on the carrier side, we're seeing carriers that maybe previously thought of it as just a bonus or maybe didn't have things set up to accommodate employer funding very well, really move toward it as a viable and really focused upon strategy in a big way. So I thought it was a good time for us to regroup, review employer funding, give you an idea of what resources are there from our side to help you with employer funding, and answer any questions that you all have with regard to it. So, Mark, I gotta give you credit. You are the one, I think, more than anyone out there in the industry who pushed for employer funding really from the beginning. And whether we're meeting with carriers, whether we're meeting with people who have their first group opportunity, whatever it may be, um, you've been insistent on employer funding, constantly beating that drum. So I would love it if you would just give folks, even if they've heard it before, a little spiel as to why it is so core to what we do and to this industry, even if the whole industry doesn't know it yet.
Yeah, no, and I think historically there's been employer funding, so I'm not just guessing, right? We know what's worked in the
Right.
past. In the individual market, executive carve-outs were always a popular strategy. Having an employer pay for a select group of executives or maybe themselves as a business owner to use the business checkbook to pay for the long-term care. And that's still out there. That's still prevalent. On the group side, we see those cases make a lot of sense, especially with the value of the coverage and the guaranteed issue. It's less about the tax advantages on the group side and just more about having a more convenient way to pay the premium or having it funded for executives that would otherwise have to be educated and convinced to buy the voluntary product. But I think more so on the group side, the second segment is really getting a base plan for all of the employees. I think that's more popular. It's more inclusive. It's affordable on a per employee per month basis. And I think it's a feel good, right? The company wants everyone to get this coverage. Most people don't have any coverage. So they're almost getting them a starter plan to kick them off, but it doesn't diminish the value of the voluntary piece of the pie. In fact, the reason we like employer funding is not just because that employer segment is funded. That's nice, of course, but it's because our voluntary participation rates get a lot higher when the employer is paying for even a little bit of coverage. And it's surprising to most people that, we get 3 times more participation on a voluntary basis. Because when you think about what's happening is the employer has paid for coverage, maybe they own it themselves now, and they become our advocates. And at all levels, we're getting more access, we're getting more education out there, we're doing more webinars because of it. They want us to share the value of what they're paying for to the employees. So all voluntary, we see them putting it on the shelf. It's one of many benefits they offer, and it doesn't get particular love. When they put their skin in the game, all of a sudden it's like we want to get our money's worth here.
Yeah.
So like that's really the silver lining. And we encourage you to push back, on clients to push for that funding, even if it's a small amount of funding, because you will get much more ability to do what you need to do on the voluntary side and give good results to the client. So when I'm selling this to the employers, I'm not saying do it for us. I'm saying do it for yourself to have a successful outcome. And here's why, and here are the carriers that are going to actually give you better offers because you're doing it.
Yep. So I think across the board, you hit on a lot of items I wanted to discuss in the agenda, be it different types of employer funded strategies out there, why employer funding. And I think one of the most interesting things that you mentioned is, on the group side, it really at this moment is not about, tax incentives to employer fund long-term care, but it is literally about everything else. Now, we may get to a point, and we are inevitably going to get to a point with the advent of traditional long-term care carriers in the space. But I think with our group hybrid carriers, we are at least getting the word out enough that, listen, the first one of you guys to add separately identifiable long-term care premiums is going to see a boost. Um, I mean, for everything else to benefit from this and then to offer a direct, sort of monetary incentive to the employer in the form of tax mitigation to do this funding, I think that will create huge demand. But the traditional long-term care carriers are going to do their part in just being able to hammer on that
Yeah, let me add one thing to that though. I think that's more in the executive carve out arena
for sure.
when you're dealing with executive benefits brokers, and where that becomes more of a standard tool in their toolkit.
Right.
And I do want to also point out that even though we're not using the long-term care deductions as much for the reason you mentioned, we'll see that more when there's group traditional back in the market, which anticipating is going to happen as well. We do see some tax deductibility from the term life side because almost all of our main carriers have their flagship product is term life, but it's still early on in the process. Still doesn't have a lot of carriers that are putting out white papers about it. And to me, it tends to distract the client from the purpose of the plan in the first place. So I like to bring it in, but more after the sale has been made.
Right.
How do we optimize this now to maximize your spend? Don't use it
Good
as an
surprise if you
excuse to
didn't
do
know
this
it,
in the
right?
first place. Yeah, because you're going to have to get their CPA involved, and any extra steps to make this more complex is counter the goal of ours, which is to simplify it to make HR easier for them to position and to get them to move forward. Because
Yeah.
everyone wants to delay the long-term care decision, whether it's individual or group, and this gives them a reason to do that where you don't want to add that extra complexity to the table.
Right. And I really also want to highlight what you said about access and education, and therefore participation being improved across the board as a result of employer funding. Because it's easy for us to sit here and say, well, here are our numbers. We're seeing a lot more participation. Digging into why is important, right? I mean, uh, if an employer is going to fund a plan for employees, be it just executives or be it, a base plan for the whole population, the reason we get more access is because, look, the good deed of the employer, um, they want to make sure that that is broadcast and known. Look at how great of a place you work at where they're going to purchase benefits for you. You better sit down for this education. That's in the employer's mind, right? If I'm going to purchase this plan for everybody, they better sit down and learn about it at the end of the day. Whether it's just they learn how good it is that I've purchased this plan for them, the spillover effect is they learn a lot more about the product as a population just by nature of in many cases, we see forced attendance, especially for smaller groups or smaller executive groups. But, you know, how much of a lift is that for your webinars when it is not just a suggestion or a flyer in the break room that goes unread, but it is like a mandatory broadcast that you must sit down and attend this webinar, right? And of course, on those webinars, we're talking about what they can do beyond what has been purchased for them, right? So if you can really make good effect of that education, you're getting the best possible stage to be able to do that. And the employer becomes much more invested in make sure these communications get out, get to the right people at the right time, and drive them to this webinar. And of course, we see great effect with that on small groups, but I think groups of any size can really stand to benefit from employer funding. I think the effect is just overall greater for smaller groups, but for large groups with, even large executive teams, I think that top-down communication and word of mouth definitely does mean a lot.
Yeah. I think there's a budget dynamic that's happening, and you should ask about what they're spending on their other benefits. A lot of times, the large groups are not doing employer funding because they're seeing increases to their major medical insurance. And it's just, okay, do I want to add another cost this year to something that I'm already trying to deal with? What the
Right.
voluntary benefit brokers are trying to do is help bring in products that don't require employers spend a lot of time to mitigate or offset, you know, decreasing the value of the benefits that are being offered or, deciding how to save, the employer money. So it's just important to be cognizant that with smaller groups, you have more options for employer funding because there's a wide range of profitability. Some of these, smaller groups are very profitable. They're not paying for as much of these extra costs with the major medical insurance. So they're more open to that conversation. But it's important to ask that question. It's important to tell them why employer funding is important, but they're going to tell you whether this is something that's realistic because they have to sell it to the decision makers. You're talking to HR more often, they got to sell it to the CFO. So you need to give them ammunition to help the company save money or help them position this in a way that it meets that company goal. And that's why I think 9 times out of 10, we don't see it being sold, is there's just not enough realistic expectations about what the employer's real motivations are in those larger groups.
Yeah, and another really good point that you bring up is that employer funding for some companies is moving out of focus because of increases on other benefits. Well, what a great time to be able to present an employer funded benefit with guaranteed premiums, right? That predictability does matter quite a bit, and it does become a little bit more set it and forget it. Of course, you still have to manage new hires. And this also kind of works into Dawn's great question, would the base plans be portable in a base plus buy-up situation? The answer is absolutely yes. It is portable, and as part of that portability privilege, if it was previously an employer funded, the employee would need to take over that premium for themselves. But that can absolutely be done 100%. And we educate on that pretty heavily, even if it's an all voluntary enrollment, just because of the nature of the benefit, right? And when you are most likely to use that benefit after working years. So we talk about portability around retirement. We talk about portability around separating from the company in any way, shape, or form. And in employer funded enrollments, we will talk about that make sure if you can afford to port that employer funded portion, that is still available to you. Okay. I want to talk a little bit about what groups are good candidates for employer funding. Then I want to get a little bit into like the sale and how we use our tools and also what's new with carriers, because I did allude to that in the beginning. But I think, again, employer funding is something that you will find to be cultural for, certain industries, certain specific groups. I don't think it's necessarily a one size fits all that all groups in XYZ industry are going to be good candidates for employer funding versus all groups in the other industry are not, right? But I do believe that there are some industries that have kind of a cultural tradition of employer funding. For me, the one that has given me a lot of opportunity is actually nonprofits. And it doesn't sound intuitive, but it actually is a core. strategy for many nonprofits because they are not strong on the payroll like other companies that are for profit, right? They generally cannot afford to pay their employees maybe even what they'd want. They generally need to compensate in order to attract and retain employees. They need to offer rich benefits. And because nonprofits have to, in most all cases, run at zero profit, if they are doing well and they have surplus year over year over year, that has to go somewhere. It absolutely has to. So it works really symbiotically in that we can put that surplus into ways to attract and retain employees, which is such an important piece to what they do. So I find that to be just the most obvious spot to look if you're looking for employer funded groups because it just it's such a missing puzzle piece in my opinion. But
Yeah,
Mark, do you have any on your
that was
mind?
actually the first one that came to mind too for me. But I'll kind of extend that a little bit. Private schools,
Yep.
right? Same kind of idea. They're not limited as much on budget as public schools, but still need to offer rich benefits because teachers aren't necessarily higher paid, or the administrative staff of the schools. So again, you'll see a lot of themes where if they've offered long-term care in the past with funding, they're probably also still offering long-term care now. So when we see the cases that are coming through, those are the cases that we're seeing that have Unum plans that were funded. And
That's
that's
number two
another,
on my list.
yeah, that's
Did you
another
have Unum?
prospect is they're still going to want to fund the benefit for the same reasons they've wanted to do it in the past. But they may say it's just for new hires only, or they may say we want to do it for everybody, but we want to keep the Unum policy in place. So you do have to kind of simplify it down again. Don't make it too complicated. Again, you had probably a small benefit on that old plan to begin with. You're just adding an additional small benefit to that, keeping it cost effective, but giving people meaningful option. But to your point, Jason, earlier with a guaranteed premium
Yep.
now in place, so you
That's
have
the
more
big one.
flexibility.
And I met with another Unum group today. It doesn't really stop whether they're late to the party or they were extremely proactive in trying to find their next solution for new hires. I don't know about your experience, Mark, and everybody's experience may vary, but I have not seen a single group that has said, because of what's going on with Unum, I do not want to continue any employer-funded long-term care. It has always been, what can I now do for my new hires instead of should I take this off the table completely? That's not been part of the vernacular of any Unum group I've talked to.
Mm-hmm. I'll give you a
So,
couple of other industries too, where we're
mhm.
seeing some traction. This is more in that closely held business uh, category, but uh, doctors' offices, law firms. So a lot of those individual business owner clients, they may own it personally, but they do want to also provide it as a benefit to their key staff because they already believe in it and they want to protect those around them. Those that are in that industry, like the medical industry in general, you don't have to explain to them why long-term care planning is important. We're seeing home care agencies being a great fit to want to fund it for their staff. And again, the theme's the same, right? Is maybe they're not necessarily paying the highest salaries, but they want to offer something meaningful to help attract and retain. And this benefit obviously is near and dear to their hearts because they're providing the long-term care services themselves that the policies pay for. So, stick with, the folks that are in your referral networks. You guys know home care agencies, right? Your clients, you're referring them to home care agencies. Ask those agencies, hey, do you guys have a plan for your own staff? And they don't know that they can access, the guaranteed issue down to 3 employees, like we've talked about. So we're seeing a lot of those firms being willing to fund the benefit because they care a lot about the benefit.
I also think, we talk a lot about non-traditional groups or non-employer groups. We have plenty of people that ask us about certain trade associations or Chamber of Commerce comes up quite a lot. And I think there is potential there for the entities within those organizations, whether you can get an offering as a group or not as a trade association, as a chamber of commerce, as any of those sorts of affinity organizations. I think there are plenty of small business owners within some of those organizations that can be really good for prospecting for employer-funded group long-term care.
Yeah, actually, I would say you have an advantage being in the buddy group here is that if you're part of this community, you get access to our preferred underwriting offers with all the main group carriers. So you don't need to get a special offer for a chamber of commerce. You have high guaranteed issue amounts for every company down to three. So you can tell them I have a special offer because I'm a part of Buddy that gets you high guaranteed issue, and you can convey that to the chamber as part of that membership if you want. But it's more of a marketing thing because you have access for all the groups to really preferred underwriting already. So you don't need a special offer because we've already negotiated for you.
Yeah, I think one of the senses I get from people out there that are maybe interested in group but don't know where to start. Um, I think one of the hesitancies is like access to groups. It's not as if for most businesses you could just like walk through the headquarters front door and talk to the receptionist and say, "Do you offer group long-term care?" And they'll say, "Yeah, sure, go right to our CEO." So in those sort of networking events with chambers, with any sort of associations, anything you're on the board of, there are business owners aplenty and opportunity to get to the right people to talk about this. So I think that is a practical way to actually go out and meet groups.
Yeah, I love that idea because you have the relationship. Anything that starts with you having the relationship is what's going to lead to success at a much higher likelihood and much faster. So you don't have to be
Right.
door knocking, like Jason said. I liked your example there. You really can focus on the networks that you already belong to because you already have that know, like, trust factor. You're already considered the long-term care expert in many of their eyes, and just go straight to the source, like Jason said, that you probably talk to on a regular basis. Sometimes we just don't think to do that, or we
Right.
feel maybe uncomfortable bringing up this topic. But again, you're really helping your friend out. You're really helping that person out by showing them that there are options like this. And they'll tell you like right away, if wow, that I didn't even know I could do that for myself. They're not thinking that way. They're thinking about business and referrals, right? And that's why you're in these networking organizations or the chamber. But you can actually help each other with the products that you're offering.
BNI networking, same deal, same exact sort of formula. Plenty of business owners there looking to connect for one reason or another. Um, sometimes those groups aren't always geared toward benefits, but they would be welcome to it if somebody can really prove that they know their stuff. So I think that's a great suggestion as well. So yeah, just trying to bring more practical networking ideas for groups because it's certainly not as easily intuitive as being in a group full of individuals, right? And saying I'm a long-term care specialist. And the trust does matter. I think you're right, Mark. Yeah, I think most of you have the same experience. If it starts from an existing relationship, you're going to have a much easier time getting your message across and ultimately ending up with a solution moving forward. But I think another reservation, just to keep hitting on this vein of where I kind of see common reservations, is asking for the employer funding. Like I need a good enough reason. Um, and without kind of that traditional long-term care tax incentive, what do I do now? I don't have the no-brainer necessarily. And it's great to be able to talk about voluntary participation increasing and people sitting down for the education. But, what does that do for me truly as the business owner or as the CFO of this company? And I think if all else fails at the end of the day, these carriers have participation minimums, guys. And even just to set the goalposts to hitting the participation minimum guaranteed and having a bonus of compensating some key employees, that is pretty powerful as far as I'm concerned because look, it's not me, it's the carrier. We don't want a bad experience to come from the carrier. So if they can start from a baseline of, I really want to offer group long-term care, this is the way to make sure that it's going to go off without a hitch at a minimum level. Like if we can just hit the participation minimum guaranteed on those smaller groups, um, we don't have any headaches to worry about. And it's not to say if you don't employer fund this, the carrier is going to, remove the benefit altogether. I think that is more unlikely than likely at the end of the day. It's not impossible. So I don't use it as like a fear, but like this is going to make it easy. We don't have to get on our hands and knees and beg the carrier to like, please take it easy on us because we got, you know, we got two apps instead of three on this voluntary group.
Yeah, you know what I find too, Jason, is, our best salesperson is actually our HR person. And when they want it, they'll sell it upstream for it. So if you
It's
have the
never the
people,
business owner,
yeah, so you
personally,
have
in
the
my
people in the room
experience.
that are going to get the policy themselves because it's employer funded, they're going to put some social pressure on the decision makers to do it.
For
So when
sure.
they're really enticed by it, you got a lot of support, and that's going to be your best way to get it sold. So the more people you have in the room, you don't have to be explicit about it. You can say the things that you just said about we need to hit the carrier's minimum participation. Then they start problem solving. Well, how do we do that? Look around the room. Who gets covered? Who doesn't get covered? They're going to start having that conversation even with you in the room talking about this. Now, there's going to be other groups, Jason, to your point, that are going to push back right away. Obviously we want them to know that it can be very affordable. But if it's truly not on the table, there's other reasons, like if they offered a benefit, open up some kind of political can of worms, with something else that they're doing, they're going to ask you, like, can we do this without the funding? And they'll just be very direct about it. And then you can make
Yep.
that decision if you think it's a good fit to do the all voluntary. But you have to lay it on the table. You have to kind of assume the sale, Jason, to your point, say, this is what's really needed. You know, this is my recommendation of what's going to make your program successful. And like I said, 9 times out of 10, they're like, okay, if that's what we need to do, let's figure out how to do it.
This is customary to long-term care. I mean, as far as I'm concerned, when I'm talking to groups about it, it is customary.
Yeah.
Yeah, that language signifies it's not mandatory. It's customary.
Yeah.
People do this, and this is the key to success that we see personally. And to your point, Mark, I don't often think that the business owner is actually the best person to sell to your point. Human resources obviously one of the best candidates, but I like to I like when I'm in front of like the most trusted second in command, and that's like a CFO, COO, something of that nature, because they can get the ear of the business owner, quite easily, number one. Number two, um, the person in charge of the checkbook generally helps, especially if they're thinking about getting it themselves. They see the affordability, things of that nature. But also, they're going to be able to put it into terms that the business owner can understand and get behind, even if there's a little elbow grease or, like you said, social pressure involved. If they like it, they'll do it. They know they have influence enough, and it's a good enough social good for the employer to be able to do it. So that's who I generally like to speak to, especially when we're looking at a case that, again, is extremely likely to want to be employer funded. And guys, I'm just going to be honest with you. I have made this call. Mark has made this call on, yeah, this group could be voluntary. I see some good signals. Even in cases where the group, it's like the broker's best friends with the business owner. I think it's actually sometimes to the detriment to be the best friend of the business owner and try to sell it to the business owner. Business owner feels comfortable enough to say, "No way. I'm not putting a single cent into this." As opposed to like their trusted second in command. Um, I just really think there's a dynamic there. I've seen those voluntary enrollments when we've given that call not do well. Position where we have to actually be on our hands and knees and beg to the carrier. give us another week, give us another 2 weeks. Don't don't hold it against us, you know? Um,
Well, the signal is if they aren't willing to fund, $20 or $30 per employee per month, a pretty small amount for a company to do, then they probably don't have enough advocacy to get the voluntary either. A lot of times when we push on the employer funding, they come back and they say, well, actually, only one person really wanted it anyway. It's probably good you didn't go down this path and you end up having a plan that doesn't even succeed after you do all that work. The
yep.
carrot pulls it from you because you didn't hit that minimum participation. So that's where you really, again, hold their feet to the fire, make sure that they have skin in the game. I'm using these terminologies because you really need to press on that to make sure that it's going to be successful. And there's warning signs when they're not seriously considering it.
Price and flexibility can actually overcome a lot of objections. If the objection is like, I do not want to spend money on this, if you show them how much it would actually cost, like $30 a month is like for certain sizes of companies, it's like 1 month of toilet paper in the bathroom. Like, think about it relative to other expenses. It is a drop in the bucket. So, like you said, I mean, at that low of a barrier, depending on how many people are funded in total expenditures, you can kind of tell it is a skin in the game sort of signal.
Yeah.
So why don't we talk a little bit about new developments in employer funding because I think we've mentioned this on the study group recently, but Trustmark has really, in a big way, put themselves into the employer funded arena. Now, this was a carrier that when we would mention employer funding to them as like, we'd like to do more employer funded business with you, they were kind of like, yeah, I mean, our systems, aren't necessarily like in the place to be able to do this. And this was before they had their term life solution, but now they have actually gone to the point of taking under what their previous minimum was for employer funded cases. This is a carrier that was always 100 lives plus, far better if it's 500, 1,000, 2,000 plus, right? But now they are willing to work with groups of 25 to 99 lives. And of those groups, they're actually willing to look at as little as 10 employees. Now, the kicker here is that, again, you got to have at least 25 employees, but for any employees not funded, there is no access to the benefit whatsoever. So I think that's an interesting rule that they have. That may sound confusing, so let me just rephrase it. Your group has to have 25 eligible lives in it, but you can you can employer fund as few as 10 employees. That's essentially the smallest application number they will work with. But if you have a group of, say, 50 people and you fund 10 people, 40 of those people will not have access to the benefit in any way, shape, or form. It's just the 10 that are funded. But those 10 people can also do voluntary buy-ups.
Hey, Jason, can I just set some context on
Of
some of it?
course,
I think it's easier, than memorizing which carrier rules are what they are. The bottom line with the carriers is they all want employer funding.
they do.
There's no carrier that says on the group side that I've run into that says, I don't want this to be already a paid for plan because it gets them participation automatically. Don kind of brought up, can they port it with them? The answer is yes, they can, but the challenge is that most people don't. But of course, that's good for the carrier. So they don't
Lapse rates.
mind the employer funding. The problem is administration. They don't know how to do the billing effectively, and they don't want to offer something, especially to a group size that's small, that's going to require a lot of their resources, and they're going to fumble it. They're going to have a bad experience. So the important thing to remember is if the employer is paying for it, we have a lot of different ways to support the administration. Buddy does. So when you have a sold case and we bring in Sandy to talk about how we're going to do the billing, sometimes we actually enroll the group on a quote unquote all voluntary basis with the carrier, but the employer is actually funding it. We're just giving them the bill and telling them how much their cost is ourselves. We don't need the carrier to provide a separate bill, especially if it's payroll deducted, because the employer is paying the payroll deduction to the carrier anyway in the full amount. So if we're employer funding a portion of it and we're doing a voluntary portion of it, all we have to do is tell the employer how much they have to pay and how much they have to take out of their employees' paychecks. So remember, it's just about the administration. It's not a limitation with any carrier really to do employer funding. I think what Jason's saying is one level beyond that, right? Which is some of the carriers will give us incentives to encourage employer funding. And that incentive is we'll lower the minimums for you because we know you're going to hit the participation minimum if the employer is paying for it. So if 10 was our voluntary minimum participation, then we'll take a group of 10 if it's all employer paid, right? Because we're getting the same 10 and it's probably better risk anyway. So it's just those kind of nuances of what carriers will go down to from giving you a GI offer, but it's the same outcome, right? Is they just want to hit this bottom line minimum number of people that sign up, and if you hit that, you can usually negotiate with the carrier based on that minimum.
Yep.
Chubb won't take a group, under 100 or 200, but if their minimum is 50 and we're funding 50, all of a sudden they'll consider it. Why are they considering it? Because they know that that is really going to be a better group than a group of 200 on an all voluntary basis, which probably won't even hit 50 or come close to it, right? So I
And this
think
signals to us, Mark, that these carriers think this is very good business, right? Otherwise, they would not bring themselves to lower those minimums, right? And forcing those conditions. I mean, even in the case of Trustmark, it's like we are here for this for the reason of employer funding. We don't even want to mess with voluntary for groups under 100
yeah.
unless they are already funded in some way.
Jason, can you do me a favor? Just pull up our carrier list
Mhm.
because where I want to take this is you don't need to memorize anything. All you have to do is ask for employer funding on every single case, right? Because again, it's almost always a good idea unless you're working with a super large case. And look at the minimum participation column. Okay. If you're able to fund enough people and it hits that number of minimum participation, then you're good. Then that I would say let's ask the carrier and talk to Sandy when the case is sold, and we'll work through how to administer it. Whether it's a separate bill from the carrier, whether it's like we talked about, a bill that Buddy will provide so that they know how much they're paying. Again, we can provide all of that to them, and that's what gets the case approved at the end of the day. But they need these rules, the rules of the road, right? Because we don't want to go to an expectation that we can get them a plan and have the carrier not come back with a proposal at all. Almost always we're offering the standard in most cases because their minimum is the lowest. So we know worst case scenario is maybe not every carrier is going to give us a proposal, but we'll get at least one carrier that's going to have a strong product we're getting a proposal from. So again, these are the things that, I would guide you to so you don't have to like have this extra thing looming over you about what are the exact rules and how do I do it? Just get them to commit to employer funding, and then we'll work with you to help you with the rest of the steps from there. But I don't think we've ever had a case that where the employer said, I want to pay for this, and we haven't gotten an offer to be able to do it.
Right. Correct. Um, so I did want to talk about a couple of resources while we're here. Start here. We changed this button to start here. This is our group sales process page. It is important enough to be right up at the top. I think if you're looking for resources on employer funding that's outside of the census quote tool, in our step 3, this ER funding quote template, I really, really like a lot. So I would use this even if you're already using the census quote tool. We'll kind of talk about the future of census quote here in a minute too. But I'm gonna open this up. And it may look like a foreign language to you right now. But what this allows you to do is to have a little bit more information than the census quote tool will be able to give us. So when you are actually using census quote, you will copy dates of birth from your census and populate them in here. Census quote tool also automatically populates ages. You paste the ages in here, and when census quote runs the pricing, you can insert them into these columns. And what this template will do is give you those same pricing figures and calculation abilities, but it'll provide a little bit more easy to read info about what underwriting levels we have, what carrier we're using, what product, total death benefit, total long-term care, monthly long-term care, the total duration, and whatever restored death benefit you have to kind of bring a little bit more education to the rock solid numbers. So I definitely recommend using this piece in tandem with the census quote. So you're sending something that is, in general, just a little bit more handsome and informative to the group. And it's very easy when you are reviewing this, say, on a screen share with a group, to go over the differences between them. You can also choose to just take a couple of lives from the census and put them into this as well to show a second employer funded summary for, say, just a carve out, right? But it will calculate the number of funded employees, the premium for each carrier when you use the census quote, of course, and it'll give you that per employee per month premium as well. So I really, really like using this. Definitely helpful in visualization. I would agree, Raymond. And generally, when I do use this, um, I have the group a bit more interested in honing in on certain benefit amounts, or can we rerun this and show XYZ amounts of benefit? So those are signs of engagement and signs that what you're sharing is working. So I do like that summary. And the census quote tool, um, so I will give just a brief overview of this, but the census quote tool in a couple of weeks is going to look much different than it does today and is going to be a bit more dynamic. So what I'm going to do is I'm going to pull myself up a dummy census real quick for you all so I can copy the dates of birth. Talk amongst yourselves for a moment, please, while I get this set up. I'm pretty quick at it, so it shouldn't be too long. And there we go. We paste in our dates of birth, auto calculates the age, just in case you haven't used it before. We choose from any of these plan designs here. We choose a benefit level. So let's say I want to fund 25,000, and I'll also look at standard whole life for 25,000. And it will give you those pricing comparisons. So in putting it into the template that I just described, you take the age, and shout out to this Excel nerd trick that Mark taught me long ago. Control Shift down will highlight all the cells in that column. Control C to copy, and you paste it right into that template. Okay, right where it says age, same thing for the pricing. Control Shift down and copy, and you can place the pricing right into the template that we have for you there. So just wanted to give a quick overview on that, or a quick review if you've seen that ad nauseum on the study group, but we like the tool. We use it every day, so we want to keep it in front of you guys. Mark, you want to talk a little bit about the future of what we have imagined for the census quote that we're working on, and what people may be able to expect?
Yeah, one of the nice things about the age of AI, and we've had some buddy study group sessions on AI, is that we can now build a lot of our sales tools faster. So the software that we're using to do that almost like embedded spreadsheet that you see, they actually discontinued. So we were we were like, okay, well, now's our time. We got to upgrade this much quicker. So we've been working with our developers and we came up with a new approach to it that we custom built, where you can drag and drop the census, any format in Excel that you want, right into the portal. It's going to produce you a demographic report. So it's going to analyze it and tell you what percentage of people are what ages, which of course is helpful when we look at the different limits. We'll look at state distribution when we look at site estates. So it's going to help you just to have that analysis. And then that same spreadsheet that you're using with the dates of birth will also go through our calculators and we'll produce totals for you for the employer funded amounts. So picture it's going to be like just drop your in your file and out comes that answer. So we're still working on exactly what that user interface looks like. I would say, by the end of June is probably my target. It may come sooner to Jason's point, but we want to make sure that we have battle tested it a little bit for you. But we'd love for you to be early adopters and pilot test it and tell us your feedback. The goal here is that you're not having to copy and paste back and forth
Turnkey.
anymore from a spreadsheet. We're just going to deliver that answer to you, and maybe even the spreadsheet itself will email to you. We're still trying to figure out exactly how we want to output the answers, but so far so good. So
Yeah.
that's the early answer.
Essentially, with this and other tools where we can, we're attempting to make it more turnkey. But what we're seeing from the early prototypes of the new Census Quote tool we're working on, uh, it's hard to get much more turnkey, and it's going to provide you far more information than today's Census Quote is providing you. So if we're able to beat that standard very quickly, I think you're really going to enjoy and find it much easier and fun to use. And a lot of the insights that are generated from the demographic report are really interesting. We don't often get time to stop and think about the demographics and the breakdown as much. And I think those insights are incredibly helpful for those who are Excel challenged like myself. Yeah, I know Control Shift down, but I can't be held responsible for anything above that. Um, it's really nice to have that right at your fingertips instead of having to pivot table your way out of a paper bag. So we're looking forward to that. Anything that anybody else wants to ask about employer funding, any of the kind of carrier rules we discussed, questions about networking, getting introduced to groups, actually selling employer funding, whatever it may be before we wrap it here, we can get you out 10 minutes early, 5 minutes overdue, depending on who you are. Anything you want to leave the group with, Mark?
No, I really appreciate everyone's coming today to this particular session. It's, as you mentioned, it's near and dear to my heart. And I do think in the future, just to kind of drop some inspiration as well, we're seeing more products and more carriers entering. So when you look at that carrier list, the product list that Jason shared in the portal, you'll see a new section that says individual products for multi-life. Well, the reason we put them there is that's another great way to have the tax advantages built into the product if you want to do an employer-funded small group and get underwriting concessions at the same time. So we're seeing a lot of carriers jumping in and allowing us to get good outcomes with the underwriting being a lot easier, even with individual products that you know and love already. So more to come here, even if you're not necessarily seeing it on the group side for one reason or the other. Jason mentioned we're trying to get them to take advantage of the tax advantages more. You don't have to wait for that. I'm always a believer. Don't wait. I don't want to wait for a hypothetical that happens 2 years from now or relies on the government to do or whatever it is. I see this today. You can sell this today. So look at those carriers and those products, and if you have an opportunity, make sure to explore those options. Don't just assume you have to go individually one at a time full underwriting to get them a plan. They're giving you ways to get the whole group coverage if you look at that list.
Couldn't have said it better myself. There's a lot of exciting stuff we're working on here, buddy. It is hard to keep your head on straight with how many things we have up in the air, but they're all really good things that you will benefit from and that you will find removes a lot of the clunkiness that you may have preconceived notions about in getting into group long-term care. So we appreciate you just constantly sitting in this seat, same time every week, and staying tuned. And we will continue to make it pay off for you in any way we can. So appreciate you all. Be well, and we'll talk to you this time next week. Thanks, everyone.